Welcome to Investment 360. In the hot seat this evening, Glenn Silverman, Chief Investment Officer at Investment Solutions. We've still got David Shapiro and Paul Hansen in studio. Well, Glenn, we've been discussing this focus on sustainability. I know you're road showing in Cape Town at the moment with Chris Hart. So the question we've got for you and that we've prepared is you're going to have to take us through what is sustainability in your opinion.
So there are many definitions and they differ slightly. Many talk to ESG, which takes the environment, social and governance aspects into account. I did a presentation today trying to broaden that a little bit to talk also about the impact of all of that on an investment environment. But essentially one's talking about how one works within society, within an environment on a sustainable basis, something that gives you longevity.
Do you believe that we have got problems when it comes to sustainability?
That certainly was my presentation today. I think we've spoken often, and I think it's that which gives us a bit of a bearish slant on the world. There are so many things out there which just looks absolutely unsustainable. Some of the ones that are highlighted, firstly, one has to look at the Earth itself. It's a finite planet, and it simply cannot absorb infinite demands on it. So from an environmental aspect, and I'm no environmentalist per se, but there's some logical constraints, I think, to physical growth, in fact, to growth or compound growth in totality. We work within a physical boundary and a finite Earth, and we need to respect that. I can go into more if you like.
Hang on a minute, we've got some reactions in studio here. Paul is jumping up and down.
Glenn, now I can see why you're wearing such a bright tie there, because this is full of buzzwords. I mean, buzzwords that are flying over my head. I mean, what? Yeah, let's get down to brass tacks here. Let's get feet on the ground. What do you actually mean? I mean, what's the connection with regard to us in the investment game with what you're saying?
So which one? I've got like 4 macro themes that I was speaking to today. The first is just finite Earth, just that we're going to have to grow in a very different way, which means I think it has direct investment implications across everything we do, working within the constraints of the environment, working and acknowledging that there is climate change taking place, recognizing that we're going to have to use the Earth, the raw resources, etc., in a very different way. This has obvious implications. We have certain asset managers that we've met with, primarily in London. One of them, the most famous, codenamed Blood and Gore, but David Blood and Al Gore have formed an asset management company called Generation Investment Managers, who look at the sustainability theme. They have a panel of people who assist them in identifying which are those sectors and industries you just stay away from, you just will not invest in.
Glenn, of course this raises the whole question about oil, about energy. Where do you stand as far as that's concerned? Because at this stage there's no real alternative to fossil fuel, certainly in the way that we live. So what were you telling your audience with regard to that?
Again, I'm so blessed in being a multi-manager that I can leave those really hard questions to the direct asset managers that we invest with. But I read a book in December, which I hope I'm going to get commission on this one. The guy's name is Paul Gilding, an Australian environmentalist and businessman. The book is called The Great Disruption. It's got a stunning cover of this tidal wave of money coming to tsunami the world, if you like. And yes, it deals with those in great earnest. So clearly we do need to be looking at renewable energy. It's been a very difficult sector. Our trip to London recently spoke about the fact people have lost a lot of money in renewable energy, but I think that's part of the evolution of what has to happen. The example again was the NASDAQ bubble back in 2000, where so many companies went in, but the strong, those with a proper business model, post-consolidation, Amazon, Google, and others, actually came back much stronger. So I think we do have to look at renewable energy in a very aggressive fashion. And yeah, there must be questions asked about all those sources of energy that spew a lot of carbon, into the environment.
But Glenn, even if we start to look at the demand from China for natural resources, whether it's copper, whether it's iron ore, I mean, do you think that the change of attitude that you're talking about, putting pressure on that, is going to affect the supply? Because there is a limited supply, and of course, in many cases, mining new ore is environmentally unfriendly. How do you see that as well?
It's interesting when one listens to the comments we're hearing back from the asset managers and people who delve more in these areas. The Chinese, they actually commend as being some of the more forward thinking in terms of some of the attitude towards pollution, damage to the environment, etc. I think they do take a longer term view on everything that they do. So I think sustainability is ingrained in the thinking about the world. Obviously, there are a lot of people and that they do damage as well. You know, at the end of the day, one of the points that Gilding makes in his book is we may have lots of resources left in the ground we may not be able to touch. There was an article in the Business Day this morning which spoke to a very similar theme, where it's not just about having the resource. We may have, at the end of the day, resources left that we choose not to touch because of the damage it may or may not create. Now, this is only one theme. It's what I call the finite earth aspect we need to take into account. And then the second was demographics. Just the number of people we have in the world, the number of aging people, the number of unemployed youth. There are some demographic issues in the world, you know, that I think are worthy of discussing. And then we obviously have my all-time favorite, government debt. And, you know, the expansion of the balance sheets of the Fed and the ECB and others, which in our mind just looks unsustainable in the long term.
Are you applying any of this at Investment Solutions? You know, when you look for multi-managers or when you choose stock, are you starting to apply certain rules like this? Constraints?
So I must say this was a bit of an epiphany for me in December reading this book and just being sensitized to the fact that this whole...
I hope you're getting commission on this book, Glenn. That's for sure.
I hope so too. I certainly hope so too. But just understanding that we need to spend a lot of more time talking about this whole sustainability thing with our underlying managers. We don't pick stocks directly, we just find managers, and we are now embracing and discussing with those managers at length, you know, how they are dealing with and thinking about these different topics. Recently, ASISA put out the Code for Responsible Investing in South Africa, which compels and just, you know, it doesn't compel, but certainly forces people to think about these issues, talk about them, etc. So we're considering what type of a positive influence we as Investment Solutions, running 190 billion odd rand under management, can do to bring these discussions to the fore, to make sure that managers are voting their proxies, thinking about the issues, taking valuations into account for different companies, where maybe a bigger discount factor has to be applied because some of those models may well be unsustainable.
And Glenn, on the waterfront, I know it's quite a hot topic overseas. What's come out of that area? Water supply.
So again, not being an environmentalist, I can't comment in great detail. Suffice to say, Secretary General of the United Nations recently said, you know, we're probably going to see, or there's a possibility of conflict that comes from the fact that we are running out of water and clean water resources. I think the message I had was, you know, something looking at the totality. We have a number of issues facing the world, and all of these have to be dealt with in some way. My fourth topic was the one of inequality, which I think also raises its own kind of ugly head. And there are a whole number of, you know, examples we gave. The one that I liked or didn't like was the fact in certain US corporates we have a ratio between the top earners in the same company and the bottom of 500 to 1. Now 10 to 1 and 20 to 1 maybe, but 500 to 1 seems like we've just stretched that elastic too far.
Glenn, let's move on to your general sentiment at the moment. Obviously, these are key concerns, and it does feed into your relatively bearish stance. Often we pit you and Paul against one another, and of course, Paul being the inherent bull, and you are the bear. That isn't changing. In fact, it seems as though you are going further and further into a bearish decline.
I think that's probably right. I think is that Paul beaming in the background there. Obviously, markets have had a run, and I think even Paul hopefully would concede that as markets go up, future returns are probably a bit lower. I think we've cautioned for some period of time that government gilts don't strike us and most of our underlying managers as a particular good store of value. A US 10-year bond at, I don't know, 2.2% against inflation, higher than that, is already negative real return. So bonds don't look great. We've discussed that cash cannot possibly look great in America, in Europe, in Japan, sitting at zero kind of return. So those, Europe slightly higher than zero. So one really, as we've said many times, are very dependent on the equity market to give you the returns that it needs. My sense of the equity market is not dealing at all with and discounting any of these bigger ESG type of factors, and possibly rightly so for a number of reasons. It's difficult to do. Most managers, and maybe Paul and Stanley might, be one of those, look stock specific. Does this company look good? And many individual companies do. Strong balance sheets, good brands, good cash flows. It's actually very hard to discount this world event, but discount it you will have to.
David, you're speechless. You never speechless.
No, I'm listening to Glenn. I'm trying to work out where he's putting his money or where he's encouraging people to go.
This is what everybody wants to know, Glenn. Where are you putting your money? So how can you, what are you recommending from the sustainability theme? Is it blood and gore?
Well, I think at the end of the day, if one is dealing with an environment in which one faces, for example, enormous government debt, then one thing they will have to do is either default in the debt in various different ways. Greece amazingly didn't default, but sure, could swear it looked like a default to me. Then inflation, try and inflate your way out. So I think what the world is doing, and investors are doing this already, are looking for hard assets. We've spoken about gold, we've spoken about property, we've spoken about equity, which too provides protection against this, especially those companies that can pay a growing dividend yield. I think that's an attractive place to be looking for money to be put. And our favorite remains a well-diversified multi-asset class portfolio run by quality managers.
You haven't mentioned whiskey as part of that hard asset portfolio.
Whiskey.
Glenn, are you speechless now?
I missed the first part of your question.
And that was a very important part of it. You haven't mentioned whiskey as one of those hard assets. Whiskey, the drink. Gone straight over your head.
I missed that part. I think you're right. So if you listen to my presentations, my discussion, you often feel like you have a need. But I must tell you, out of all of this comes a lot of opportunity as well. This is not doom and gloom per se. There are going to be winners. There are going to be new industries created that maybe we haven't even thought of. But I think what we do have to do is think. I think we have to apply our minds. We are discussing this with all our managers, saying, guys, how are you dealing with these issues? How are you discounting a changing world, an environment in which some of these activities cannot be sustained? I mean, it's relatively obvious to all of us. And how you think about the world ahead. Interesting to me, again, in speaking to the managers in London, in this renewable energy sector recently, there's been a bloodbath. So a lot of people, for example, put huge sums of money into solar panel manufacturers, etc., got oversupply and lost a lot of money there. There's been bad returns even in renewable energy. But I think that again reminds me of the NASDAQ bubble we saw in 2000, where you sometimes have to have too much money, consolidation, the weak falling out, in order for the strong to come forth.
Glenn, thanks so much for joining us. Glenn Silverman from Investment Solutions, and a big thank you to my guest, Paul Hansen from Stanlib. David Shapiro, Sasfin, not going anywhere at this stage.